David Burrows is our guest on this edition of Market Call. Hello again, Michael Hainsworth with you. We're talking North American large caps, and we're off the Lethbridge now for Richard. Hi, Richard.
Hi. Thank you for taking my call. Season greetings to you guys. Hey, listen, I'm interested in Disney. I have a position in it. I wondered if I should add to it the way things seem to be going. I'd just like to get your take on that particular stock. Thank you very much.
All right, thank you.
So, Richard, following the strength in financials, industrials, energy, and technology, in the last 3-4 weeks, consumer discretionary has started to join this rally. The first group that joined it, because I watched this very closely, was sort of the travel and leisure group, which, of course, Disney has lots of exposure to. Mm-hmm. So if you looked at, for instance, the PEJ, which is the travel and leisure ETF, broke out to new highs and is performing really well relative to market. So I like the sector. One of the concerns, of course, has been subscriber base at ESPN. And that, I think, probably continues to be a bit of a concern. But that being said, even the media group itself has started to lift, some of the broadcasters and some of the cable cos. So I think that probably it's not a bad entry point. Again, we're bullish on market, we're bullish on consumer discretionary, and as new money is coming in, there is lots of money going into passive investments like the SPDRs, the S&P index, and that will lift a lot of boats. I'm not going to say it's the strongest place in the market, but I think that things look pretty good. Now, if you get some tax relief in the U.S., that's not going to certainly hurt them. Mm-hmm. And certainly the employment data is getting better. So travel is one of the first things that people spend money on. We haven't owned the stock for a while. I don't own it. We came out of it, I guess, around the beginning of the year. As things kind of rolled over in January, February last year. But you could do something here on the stock.
The seasonality of the discretionary space tends to be very bullish until about mid-April or so.
Yeah.
Would that be a good opportunity to sort of get in, get out? Or, as Richard is a long-term buy and hold guy, you just want to stick it in a coffee can in the backyard?
Well, look, I think we're in a very different environment than people have been used to being in over the last number of years. Mm-hmm. I said earlier to Michael, I'm more bullish than I've been in my 30-year career, right? We're very cautious as a firm, but there's a time to put the pedal down. And we believe we are in the process of the beginning of a pretty strong market. So I think that you could probably do quite well over the next at least couple of years. And I think you're going to start seeing estimates in general go higher in these sectors.
All right. Richard, thanks for that from Lethbridge. We're up to Abbotsford, BC now for Hazen. Hi, Hazen.
Hi.
Welcome.
Hi, David. I would like your expertise on 3 insurance companies in Canada. Which one of the following would you choose? Manulife, Great-West Life, or Sun Life? Thank you very much.
All right.
Well, the great news is, Hazen, we don't have to pick just one. We actually do have quite a lot of exposure to life insurance right now. We have 2 big Canadian positions. We have both Manulife and Sun Life for different reasons. But I think that they both look very attractive. The most important thing is I think that we went through a cycle low in interest rates in July, and we are likely to slowly work our way higher in rates over the next number of years. And that's a big beneficiary to the big win for the insurance companies. Mm-hmm. And at the same time, equity markets we think look quite attractive. That can also be a win for them as well. So I would buy either Manulife or Sun Life. I'd also take a look at Pru in the US PRU, which I think also looks very attractive. And arguably, the rate structure in the US is probably more bullish for the insurance companies than the rate structure in Canada.
Thanks, Hazen, for the call from Abbotsford. Quick one before the break. It's Mark in Vaughan. Hi, Mark.
How are you?
Good, you?
Excellent. With season's greetings. A question I have is I picked up some silver wheaton. I used the charts and the 10-day and 21-day moving averages. Just wondering what your opinion is, picking it up down here on the low.
Sure. So, Mark, as a firm, we don't try and pick lows in stocks. I can tell you that there's a broad number of precious metals companies that have recently seen their weekly momentum flip from negative to positive. Silver wheaton's sitting right on the 150-day moving average, which I think is sort of attractive. 150-week moving average. So it may be a candidate for a year-end bounce after tax loss selling. I would prefer to see it start playing out. The problem is there's a bunch of other stuff that's in gear right now, and so I'm not sure you have to try and pick bottoms on things. But if that's your thing, certainly it's trying to put in some kind of small base, as many of the other precious metals companies are doing. So you probably want to look at it more as a trade. But I do think I would encourage people to look more at things like the financials and the industrials and energy, frankly.
All right, Mark, thanks for that. So we're going to go from Vaughn to a commercial break. When we come back, we're going to look at the past picks. 2 of them were equities. 1 of them was cash. We'll find out, considering how much more bullish Mr. Burrows is since this time last year, whether or not cash is still king. We're back after this short break.